Yeah, what's going on, everybody? Good morning. Happy Monday. Merry day after Easter. And welcome to the show. Welcome to the show. How's it going? We had Netflix on Thursday after the close. Reported a nice, spicy beat. Positive for the markets. We got to the top of the range at 1020. And then here we are this morning, taking it back down. I guess they can't all be winners. We got and look at that pop, and then just an erosion back down. Yeah, well, it could be 3 down. Let's see what we got. Could be the top also. Could see this come all the way back down to that point right there before we can find supports and bounce. That basically takes almost the whole move back, right? Bummer. Yeah, it is what it is, you know. It's the way it works. It's the way the rubber ball bounces, I guess you might say. The market ball bounces. Can't all be winners all the time. It's too bad the market was closed on Friday, right? Too bad, too bad. And so the U.S. market is $19 trillion economy. 19 trillion. It's pretty crazy when I think about it, 19 trillion. That's, personal consumer expenditures, 2023, 18.8 trillion. So where do we spend all that money, right? 3 trillion on healthcare, 3 trillion on housing, 2 trillion on other stuff, other services, 700 billion on entertainment, 1.4 trillion on food and accommodation, and that's not groceries, all right? That's services over here. That's like restaurants. Not counting takeout for restaurants. And then 600 billion on transportation. Kind of wild. So share this screen so you can see it. Right here, look. 3 trillion on healthcare, 2 trillion. Yeah. 400 billion on gas, 400 billion on home furnishings, 750 billion on vehicles is not really that big. Other goods. So when I talk about the $3.3 trillion marketplace, this is the little orange slice is what I'm talking about. Like sporting goods, clothing, other goods, household furnishings. We take out groceries because you can't really import those. Take out gas, can't really import those. We do have some vehicles that are some domestic, some imported. So really it's, about $3.3 trillion worth of imports that we bring to the economy and sell every year. So there you go. That's the sectors that move. And then diving in a little deeper, how's the wealth distributed across, who holds the share of the wealth, right? 1.3 million households in the top 1% hold $49 trillion worth of value. The next 49% down hold $100 trillion of value. And then the bottom hold $3 trillion. The bottom 50% hold $3 trillion worth of, almost $4 trillion worth of value. Whew. A family with less than 192,000 would be in the bottom 50%. I'm probably hanging out right here. Anyway, there you go. I thought that was an interesting graph, but this one shows you kind of where the sectors are that stand to be hit the most. And really, since the economy is, you look at the U.S. economy. Now, I'm not talking the stock market. I'm talking the U.S. economy. Economy and stock market, you got to divide those, separate them. Most of this stuff over here, unaffected by tariffs. Now, some of the things that happen in here might be healthcare, medicine. Some tariff on medicine might affect the medicine part of that by a few percentage points. We talked about this last week, how 100% tariff is probably only 10% toward the cost that we would see as U.S. consumers. So, in education, unaffected by tariffs. Entertainment, unaffected by tariffs. And we're seeing that in Netflix right there on Friday. So, financial services, unaffected. Housing utilities, unaffected. Transportation, look, $12.7 trillion of our economy virtually completely unaffected by tariffs. And then you could even add in probably another 1.4 trillion. You could say, well, groceries and fertilizer and this and that and the other. Okay, we can argue whatever, but we're looking at like 3/4 of the economy completely agnostic to any kind of tariffs at all. So I don't believe the story that tariffs are causing the correction. I think the correction is due to being overcooked. We had an everything bubble. Everything was overly inflated. So be careful out there chasing narratives. Be careful out there making decisions based on tariffs. And there you go. So SPX right there has nothing to do with tariffs is the point, Rob. It has all to do with the fact we were overcooked. And we're on a 100-year overcooked cycle, and we're probably going to pull back much bigger, much deeper, much more pain. And it has nothing to do with tariffs. So just be careful. Be careful. Let me pull up let me see if I got that other chart up. No. Let me see if I can find it really quickly. This chart just blows my mind. Yeah. Every time I bring it up, pop it out, pop it over. This one right here. 1927. Yeah, 1931. Look at that. Here we are, heading into 2026. And yeah, I think we missed this one a year. It was 2022 was kind of bad. And then maybe we'll get some sparkiness into 2026. And then 2030 actually is the bad. So we'll see what happens here. But then we could come back out 2035 and back down in 2039. Looks like 2034, 2035 is going to be a particularly spicy time right there. Like, .com bust, 99, bust, and then housing, and then right down again. Dun, 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 dun. These are plus or, I've seen these plus or minus a year when I think back through here. Like, you look at all the major big market pullbacks, they kind of line up with these numbers down here. It's kind of crazy. So this is kind of the economic cycle. It kind of runs in these numbers right here. 18, 20, 16, 18, 20, 16, 18, 20, 16, 18, 20. Yeah, they run in that repeatable pattern of good times. And then these down here, kind of wild when you think about it, that somebody drew this in 1875 and been pretty bang on all the way through. Pretty amazing. I think it's pretty amazing. And don't discount things that people saw a long, long time ago. You can get caught up in the local story, but it's just human behavior, herd behavior, really, that causes that to to do that. So the S&P 500, we were looking at last week that it probably needs a pullback right here before we can go higher. There's the major resistance right there. If you've missed anything I've said, you can go back and watch all the past commentary. It's there. This high is the important high, and that low is the important low right there. As long as we stay below it, stay below those two things right there, we have downward pressure, and we might even make a lower low than we made. Was that 2 Mondays back at this point? April 4th. Yeah, I think that's 2 Mondays back now. Monday. What was the Monday, April 7th? Yeah, that was 2 Mondays back. 1, 2. Yeah. So there you go. I don't feel the best today, so I do apologize. My energy level was down last week. Yeah, my environmental allergies here trying to kill me. It feels like in the spring, East Tennessee. So we have downward pressure on SPX, same two, that high and the low back over here. Same two zones. As long as we're staying below that, we have downward pressure. Could go make a lower low down around 4,800. And it just seems like we're consolidating in here. Now we have a 3-wave potential retrace that could bottom in here and push us higher. So that's what I'm kind of keeping an eye on. We do have some major earnings this week. Tesla coming up tomorrow. That'll be a big, fun, spicy one. And then we have Google later on in the week. Let's see, this is pulled up off of Twitter or X or whatever you want to call it. Off of Earnings Whispers feed. Tesla right there tomorrow after the close. So when I'm doing 30 minutes of awesome, we can kind of keep an eye on what's cooking for Tesla. We have Alphabet, Google over here on Thursday after the close. We've got a lot more big tech next week, like Meta, Microsoft, Apple. Can't remember if Amazon's in there or not. So by the end of next week, we'll have most of big tech earnings out of the way. A lot of the S&P 500 companies will have their earnings done by, say, the second week of May, and we can start seeing stock buybacks ramp back up. We're kind of in this devoid period of stock buybacks right now, where we just, everybody's in their blackout window and they can't really buy. So should be an interesting little, if you're in gold stuff, NEM reports earnings right there on Wednesday. ServiceNow, IBM, O'Reilly's has been rocking and rolling. BA right here before the open on Wednesday. There's going to be some spicy potential moves in here. I think the expectations are pretty stiff. You got to have good numbers. Otherwise, you're probably going to get punished in the current environment. So that's what I got to say about earnings. That's what I got to say about that. So we do have Tesla coming up tomorrow. We got downward pressure. I think we could see downside to 180. Downside to potentially 180 all the way down here. Funny enough. But then we have an upside potential. And they're adding a new element to their earnings. They're going to have a company update. They've never done that before. So that was big news on the company page that when they do earnings on Tuesday, they're also going to do a live Q&A company update. They just did a company update live on Twitter a couple weeks ago, so maybe they provide some more clarity on upcoming events for the company. We'll see what happens. This is downward pressure. Like I said, support around 180 and potential to go on up higher after we get through with that. But this looks like it was a big 3-wave up. Blend, push down. Could ramp higher. I don't know. Support right there. If we break down below it, we could come on down. So be careful out there. Chasing anything in the markets. NQ still pushing down in the correction that I identified last week. Nothing's really changed. First move down, second move up, and third move down pushes us down to 17, 17.7, 17.5, 17.4, 17,000. And Russell still has that downward pressure too. First move down, retrace, and last move down will push us back down in the 1760 area right there. All right, CL. Little rally back up to test the resistance, and we might flush it back down again. Be careful. Nothing's clear on oil at the moment. Gold pushing up to crazy numbers. Should have been enough to salvage the gold rush trade. Let me know if you booked that one out. Got to the target. Got something even spicier. Pretty nice move. Be careful. It's going exponential. You know what happens on exponential charts, right? You know what happens. As soon as we all have, got to tell everybody to buy gold. Gotta, we're all gonna be rich. Gold's going to 1,000,000. And we get the complacency and the correction. It's gonna happen. It's going to happen. All right. Be careful. 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 Looks a lot like this chart right here. Look. Now look where we're at. Looks a lot like this chart right here. Now look where we're at. I mean, we see this pattern over and over. Hadn't even been that long. Gold is going to give it back up. It's just a matter of time. How much higher can we go? $323. Next upside resistance right there. This is just a big mania. We'll probably come back down in here. Just warning you. Just warning you. All right. It's just, they don't go up forever. None of them go up forever. It's just, I don't care what anybody's like. Buy gold. Be freaking careful. Look at what we got cooking here. Can we stick the landing? It's 1 green day, 2 green days, 3 green days. Maybe. But it's not the same on Ethereum. So, only got 1 green day. If this can beat these highs right in here, get back above 90, we have a good chance of going on higher. Now, as I've drawn on this chart, I think it is, we might retrace back to the roadmap line after breaking out. We might get this big move up and come back, retest before we can go higher. We need to do the breakout, and then highly likely we retest the breakout. Be careful. Don't get too excited on Bitcoin until we prove that we're actually breaking on out through this high from January. Then we can start talking about the upside targets somewhere in the 150 to 170 area, but we got a lot of stuff to work through. A lot of consolidation zones, a lot of resistance before we get up there. Be careful out there. Perma-cautious. I mean, if you're not cautious about your positions, I don't know who's going to be for you. NKD, an indicator of global liquidity. Might this be indicating that we're done and we're going to go higher? take Bitcoin with it, and then Bitcoin leads the US market by about 2 weeks, possibly. Might all kind of come true. We'll see on that one in the coming weeks. So this has the potential to bounce and go higher. Looks like we've done a 1, 2, 3, and we're in a 4. We might do a 5 and a retrace before we can actually get out of here. So this looks like potential. There's 1, 2, 3. We're in a 4. Might do a little 5 up in the vicinity of the roadmap line. Do a 618 retrace, and then pop through. That would be kind of what I expect. Right there. Dollar pushing on down. We're gonna, oh man, we're in the vicinity of that target that I've been looking for years. In the vicinity. Not far to go. 97. And then if we break through that, we might go on down back to where we started in early 2021. Right there at 89. Very possible. We go right back down there. The low 90s. We reset here quite often over the years. I mean, look down here. We spent so look at this. If the market goes higher into, like, you know what happened here, right? Look at it. This is what scares me the most, probably. Like, look at this. So, you know what happened here? And you know what happened here? We kind of did this, and now we're doing this. That was like a 14-year correction before we got back out of that. Let's be careful. We could be setting up something more sinister than we have in a long time. NFLX, getting a little juice. I did play that for Termite Trading Lab with a spread. My spread is full profit above 995. Maybe I can get lucky and get that sucker closed. Of course, I can't do much about it while I'm live on here. TFS. I get, I played it based on the fact that the roadmap line bounce had closed positive. Wanted a little lower risk, so I put on like almost a 1-to-1 risk. Looking for that to pop on up. I just needed 995 to make my money. Looking for 1100 on the upside right there for NFLX in the coming months. How long would it take? Might take a while. 3 to 5 months, maybe. Could go faster. DFS, looking for that to close above the 618. Kick off the entry. Spotify, if we get the close up here today, kicks off the entry for 683. Pretty nice. Now, I go pull these gainers. Everything moving $2 or more up in the pre-market, I put it on the gainers list. Everything moving $2 or more down, I put it on the decliners list. Now, we had stuff that was actually set up with entries on Friday. Or Thursday. Excuse me. Thursday. And these are down here. Dun, 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 dun. That one. There's a discrepancy between my other tool and this tool. That one did a bounce. Here's the high. Here's the low. I've not checked any of these, so just be careful. BOC. Let's see. Let's turn on the statistics. Talk intelligently about them. Probably looking at that high, that low. Did close above right there. Did take a little long, and it's been kind of flat with the downtrend. Not the most getting me feeling great about it setup. Negative profit factor. That one's going to be a marginal setup right there. Marginal. It closed above just barely, but it's a downtrend in the roadmap line, pretty steep. I'd be willing to bet that one's going to fail, especially with a negative profit factor. Be careful on that one. CL. Oh, that one has a... So it has the big picture set up over here. Got the adjustment on. I bet that was what this... Yeah. Got to be careful keeping it adjusted for... So we've got that big picture move down right there. Came up, didn't trigger the entry, but then we did a sub bounce in here. That high, that low. Closed above right there. 101.92, which just triggers the bigger picture. You could get out right there, or you could move your stop up right in here, and you'd be in more aggressively for the bigger picture target, potentially up to 112 right there. Clearwater Energy.A. There's the high, there's the low. Looks like my filters are working. I have some filters built into TradingView that I don't have on the Python. So I have this one. The filter here is this one was still valid. Hasn't hit the target, hadn't hit the stop, so that trade is still active. DFIV. Another negative profit factor right there. Some people said I don't throw out enough trade ideas, so here you go. These are trade ideas right here. I don't necessarily like many of them. That one's got an infinite profit factor, which means it's never taken a loss out of 2 whole trades. You can flip a quarter twice and get 2 heads pretty easy. Or 2 tails. So 30 becomes a statistical population. It's not what we have here. EMLP. There's the high. Here's the low. Kicked off the entry. There's the entry was on, met the entry criteria Thursday. Entry is today. Pulling back a little bit. This is First Trust North American Energy Infrastructure, and 39 is the target. Stop is always $1 below the low. Right there. EWD. And we've got the high. We've got the low. There's the entry. 46.50. Target. Fair profit factor. Fair win rate. Fair. This one, not great. FCPT. So Python probably picked up that one right there. Looking for 30.46, but we do have the bigger potential in here also that is not kicked off. And that would be 31.89 on that target. You got to take your choice. I would go more conservative, especially in the market we're in right now. If you want to go for the bigger target, lock it, lock in your some profits and ride it on up. This one's probably going to be that move right there. Kicked it off, 44.55, and we still have that bigger picture move right there that is not kicked off yet for 46.16. Seeing a lot of these moves in the moves. Energy showing up here quite a bit. CLNG. That one did stop out on the last one right there. Negative profit factor. That high, that low. It's probably actually this high. Yep. That high, this low. 46.96 target. And it might fail. I mean, 39 profit factor. That's for every dollar you've lost, you've made 39 cents. So it's negative. No two ways about that. Anything less than a dollar is 1-to-1. You just churn in your money. So when you see a profit factor of 1, that means you made $1 for every dollar you lost. You're at scratch, right? No profit. So really, I like to look at the ones that are 2 and 3, 4, 5, 6, 20, 30, 40, 50. We do see some of those. So like, just take a diversion real quick. Like when this one kicks off right here. Dun, 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 dun. Pop up, please. Numbers. There we go. Like 3.7. And it's not always the hottest, spiciest one, but and I see. I can't even remember. Like, this one's really good. Yeah. Infinite profit factor on Copart with 23 trades. So there's some good ones out there. You just got to be careful what you play. Rolling back down where we were. That's why I hunt through these every day and just kind of look at what's set up. What might we be able to take? What opportunities might be out there? Now, I don't usually show all these off because I usually pick the best one or two and show them off. Not necessarily big up on people putting money at these and then losing. I mean, nobody wants to lose money, right? Now, as I talked about last week several times, there's 56,000 trades back tested in this data here across 3,600 tickers, almost 4,000 tickers, 56,000 trades. The average one wins 75% of the time across all, ticker agnostic. Right, not looking at the specific tickers statistics. 75% of the time that this pattern shows up, it works. It goes from this 618 line up to that 1448, 1.1448, which is 90% of the way to the 272. If we went all the way to the 1272 right there, the statistics drop down to 70%. I wanted it a little bit higher, so we went with that as a conservative exit. So often enough, we fail right there. So 75% of the time, this pattern sets up in the market. Thousands and thousands, tens of thousands of setups and trades and tests. It works out before it goes $1 below the low. It's not bad. That's a high probability pattern, right? K-view. $24.80. Infinite profit factor, one pass trade. You always make your decision, right? That one's already in a trade. Kicked off a secondary entry right there. Looking for 202.37. And has a positive expectancy. 51 trades in the history. That one's a pretty solid one. Eli Lilly kicked off a bounce. Maybe you like it, maybe you don't. Just barely closed above. That'd be 977 on the target up here. About 140 to the upside. We are above the roadmap line. But the roadmap line is pretty flat, so I don't know if that's trending at all. Be careful out there. LNG, I am in this trade already. Just letting you know. Yeah. Here's the high, here's the low. That kicked it off today. 268 is the target. I've already got my target sitting there. Close your calls, dummy. You see, it's my note. Close the calls, you dummy. ORI. There's the high, there's the low. For that right there, 40.73. Yeah, not the smokingest numbers, but not bad. 40 trades in the history. Relatively reliable. See, I have a kind of working theory that some tickers are reliable and some tickers are not reliable. Some tickers trend and some tickers don't trend. So the ones that have an abysmal profit factor don't typically trend. The ones that have smoking hot profit factors trend a whole lot. So right here, this bigger picture didn't fire off right there. But when we look at the smaller picture from here to here, we kicked off right there on Thursday, looking for 38.55, which is still well within the consolidation. So this one could work out. It didn't trigger the trading view setup. It's quite interesting. QURE. Now that one has the bigger picture set up, but it triggered that one right there. Looking for 16.50 on the upside. So if you wanted to go for the bigger picture, that'd be 21, but I would, be careful when we got up through 1650. Have your stop back up near the entry if you take that one. RPRX, like that one. This one probably does not trend whatsoever. At least in the history, public history it's had with 3 trades. SWX, here's the high, here's the low. Potential for that. TPL, Texas Pacific Land. And the big picture, there's the high, there's the low. But my algorithm picked up this correction right there. Looking for 1550 basically on the target. Pretty spicy numbers there. TRV. And that one fired off. We got that high. We got this low. Fired off right there. 272 is the target. If you're enjoying this content, let me know. You'd rather just get back to the normal, hunting for, what's moving for the day. I understand that too. I like, that's where I like, what's moving. What should we watch today? So that one also firing off potentially 67.91, 1.2 profit factor. So that's all the ones that fired off on Thursday right there with new entries. Circling back around, checking out what's moving. We've got Google coming up later the week with earnings. Looks kind of bad on the downside here. We might see this push on down. Now, Elliott wave-wise, the correction on a lot of these Mag 7s look like they're about done. Getting down to levels that might provide a bounce. All these kind of looking the same. Very similar deep correction. Oops. Add an extra A. And yeah, so we can see these bottom out and push higher pretty easily. Opportunities if you're willing to put your money at risk. Be careful on exponentials. That's played out. Looking for a retrace. Silver still hasn't broken out, so we're probably going to see gold retrace, reset, and then we'll see silver and gold ride together on the next pop. I don't think gold's done. I think we're going to get a retrace and then another pop. Capital One. Earnings tomorrow. Below the roadmap line, that's downward pressure. MSTR was moving up with Bitcoin, but now it's pulling back a little bit. So it's kind of interesting. Ugly. Absolute insane. Be careful on leverage right there. That's going straight up. Starts to come straight up, go straight back down. UXPI. That's a dumpster fire. Reverse split. Dumpster fire criteria. Be careful. That's the kind of thing you can lose money on. Dumpster fire chart. Be careful. Pharmaceutical, biotech. Also, on top of being a dumpster fire with the reverse splits and all this price action under the roadmap line, one little pop does not fix everything. Be careful. GDXU, 3x leverage on gold miners, going a little nuts. Shiny is 3x leverage on gold microsector. Be careful. We're going to see these are all going to rock and roll, and then they're going to be sucky. As soon as they suck up everybody in, it's going to suck when this corrects. If you're long, be careful. Be looking for your exit. Please, please, please. This is struggling to break out, so it has a downtrend of highs cooking. If this rejects today, be very, very careful. Love down at the caution zone. I might get put those shares. Cool. Got earnings Thursday morning. TSDD is Tesla short, and it's ramping up a little bit. AEM. Seeing this hit highs. TECS. Was this a bounce and we're going higher again? Or do we pop up, hit the 618 and crush back down? It's kind of tell. Do we pop up and break out? So there's the zone right there. Right around 79. To expect we go on down. More Tesla shorts. All these leveraged things. WPM, wheat and precious metals, rocking and rolling. ARKB, that's Bitcoin, trying to break out. Not getting it yet. UVIX, be careful. That's kind of like what I was just saying. Was this the pullback and we ramp again? Or are we going to pop up and reject down? MLGO did bounce off of that. This is a dumpster fire. Reverse split. Remember this. It was never $2,000. All right. You don't look at this and go, wow, that was $2,000. I bet it goes back there. It had a reverse split here, one for 10, and then another one right here, one for 20. So that's a 200x multiplier. 10x plus times, 10 times 20, that's 200x. So divide the price up here. This 2,000 by 200. It was $10. And it eroded down to a level where they needed a reverse split. They boosted it up, and it dumpster fired out. They reverse split again. It boosted up, and it's probably going to dumpster fire out again. Be careful on those. These very telltale sign. Reverse splits are not bullish. Virtually ever. Yeah, I've yet to see one where I'm like, man, that reverse split turned that company around. Just not the way it works. FXF, currency shares, Swiss franc. Man, nice little pop, probably hitting targets. Got that high, got the low in the target zone. GDXJ. Have the potential to going out to 75, but be very, very careful here. Very, very careful. Probably nearing the end of this move. BitX, leverage Bitcoin, FBTCs, Fidelity's Bitcoin, and SHFS. Looks like a complete pile of duty water. Another dumpster fire. FNGA, leverage, Tesla we already talked about, ASML. Looking for that to push on down again. Rejected here. Can we hold this? The big question here, can we hold that 618? That's, I high level was like, well, it looks like we're going to push down again. We're below the roadmap line, so that gives me a downward bias. We have the 618 retrace right here. We moved up off that low very quickly. 3-wave retrace. If we can hold here, break back through here, we might be able to get through the roadmap line. Might. Remember, we're already in a downward bias, all right? I kind of expect that to fail, and we go down here. Am I trading for it? No. It's just what I expect to happen. It's in a downtrend. Like, the trend is down. Where would you expect it to go? Further down. CRWD. Rejected off the 618. If this doesn't find support at the roadmap line, we could easily see this rip down to 260 right there. Meta. Looks like we're going to push it on down to the 450 to 470 area. That's the rally up to the roadmap line, bust down through the 618, and extension right down in there. Downtrend. Trend is down until we prove otherwise. JNVR. Janover. The thing about it, to get back to a bull market, we need bulls to show up to the market. And right now, we don't have bulls showing up to the market. Another dumpster fire. Another reverse split. Garbage. Goldman Sachs. Hadn't been able to stick the landing yet. Potential, but not back above the roadmap line. That's still a downtrend. QQQ. Are we going to do the 618 retrace? So that's the NASDAQ chart right there. Just, you know, divided by 41. Essentially. Why 41? I don't know. It's just the multiplier they got. So 426 support. If we can hold it, we could go higher. It's got... Golly, I cannot type today. So yeah, same deal here. Looking for that push down. And NQ1 exclamation point divided by 41. And roughly the same prices as QQQ. Not perfect, but roughly. Off by $2. All right, looking on through the list here. AppLovin, downward bias, probably gonna go a little bit lower. GE Veranova, above the roadmap line. We could push up higher. This could be just consolidating here before we pop. Getting above the 618 is the entry, and 46 upside targets. And PTIR is PLTR in a leveraged fashion, and we may reject that 618 and push lower. Entirely possible this was the first move down, and we get a copy right over here, an echo of the market. Right there. Be careful. The numbers on this company are legit insane numbers. All right, this is the... Oh, cool. Not going to pull that up, huh? Cool. Let's see if it'll do this. Hey, we got the Easter sale last day. And there we go. Look at these. Look at these numbers. These are stupid numbers right here. 490 price to earnings and a 81 price to sales. This thing would have to go like this on earnings to justify these numbers. And you know, maybe it will, but that's a dangerous place to play. All right, it's already overvalued. You know, look at, here's another one that's pretty crazy. You know, right here, we're finally back below 20 price to sales. So we're coming down into a zone of reasonableness on NVIDIA. A 20 price to sales is crazy. It takes 20 years of all their sales going into their share price at the current level with no missteps to justify the pricing. So you look at PLTR, and we're talking about the numbers are like 82 years at the current of all their sales. The entirety of sales, 82 years of all their sales going into their share price to justify this share price. That's the land of bubbles. So be careful out there. On PTIR, Apple still has some downward pressure here. We popped up. We're probably doing just like NASDAQ. If we can hold that 618 retrace right here, we have the potential to go higher. That'll be the same on Microsoft, and Meta, and all these others. Except Meta looks like it might actually go lower. Yeah, it did go lower. So already busted lower there. Microsoft already below the 618. So this one might actually make a lower low also. Be careful. Always be careful. AVGO rejected the roadmap line. Watch for the 618, which is about right here. Here's the low, here's the high. Right there you go, 155. If we hold that, we can go higher, retest and break out, retest through that one, and go higher. Downward bias until we get through that. AMGN. It's got downward pressure, be careful. It tried to break out and failed. That's not good. Not good for long-term continuation higher. Stepped across the line at the 786. That might push down in the 240 area. SMH. Wow. What a big deep retrace. And this one is an ETF with some of the largest semiconductors in here. Here's the shares. NVIDIA, 20%. So it's a lot of NVIDIA. A lot of NVIDIA exposure. TSM, 11%. So 31% of this is those two companies. Broadcom, AVGO at almost 9%. ASML, 5%. QCOM, AMAT, AMD, KLAC, ADI, and Texas Instruments. Rounds out the top 10 holdings for about 70% of the whole value of that ETF right there. And there's other ones like SOXX, a little bit different mix, more balanced and more on AVGO, less on NVIDIA. So you've got, a variety of semiconductor ETFs, even this one right here, an ultra semiconductor ETF, and more stress. Look at 43% on NVIDIA. So as goes NVIDIA, this one's probably going to go that way. And then they've got 40% of, so 40% on NVIDIA and 40% in treasuries. And then we've got some AVGO, QCOM, AMD, TXN. So this one's very heavy. If you wanted to leverage NVIDIA without going full up on NVIDIA, USD is the ticker for you right there. That looks pretty bad right now. Potential to reverse it, but we're going to have to do it. Gonna have to do it. All right, W-Day. It's like the same kind of retrace. Rejected that area. Probably going to push lower. Support down here. And first move down to here. Retrace to here. Yeah. That looks like we're going right down here. Not trading for it, but it might be a buying opportunity if we get down there. CRM. Looks like we're heading toward the bubble. Target ETHD. Ultra short Ethereum. Not breaking out. If we break down through the roadmap line, this may indicate Ethereum is going to turn around and this push lower. SPXL, 3x leverage on S&P 500. Definitely outperformed to the downside with 3x leverage. Looking for this to hold around 100 and turn back higher. XLK. A lot of this same pattern where we've moved up. We're retracing. Want to hold the 618. NVIDIA. Moved up. Retracing. This one has opportunity to come down to further target at 70. Be careful here. If we don't hold this, here's the line in the sand right at 91, basically. Maybe even 92. 91, 92. We get through 91, 92. Very likely we're coming down to 70 on NVIDIA. Amazon. Very likely we'll push this on down. 147 area. TXN. That could easily go down to 134. AREB. Reverse split. Another dangerous dumpster fire setup. Look at that. Reverse split. Reverse split. Reverse split. Nasty. JPM. Rejected off the roadmap. Unless we can break through. You know, this could come down, hold a 618, and then break up through, get above here, above this consolidation, and indicate we're going higher. But if we don't, this could go on a bigger, deeper retrace. Carvana. Push down further, then right back up here in the consolidation. If we can get above the 618, indication we're going on higher. There's their levels right there. 225. We can get above that, going up to 321 likely. If we break back down below this stuff right here, we could easily flush. And that could be a big flush, like down here. Ouch. You know, Carvana, they've been slowly working on their numbers here, but, you know, their price to sales, they move a lot of sales, but don't make much money. Price to earnings, crazy, 133. So they're not very profitable. They spend a lot of their money on their COGS and operating expense. The cars are expensive, so COGS and operating expense. That's cost of goods sold, COGS. And let's just compare CarMax. Yeah, see, CarMax is a 0.38 and a 20. Large COGS, large operating expense. Barely making money. BTI. Boy, that could push down. Looking for that 618 to hold. Looking for this to be the bottom, but I'm not convinced yet. Snow came up, rejected the downtrend highs. Retracing. Looking for the micro 618s right there. If we can hold, turn back, break through the downtrend, this can start a bigger upside move. Resistance here, and potential target right up there. QCOM, almost done, maybe. Pushing on down. Support down here. FAS. And we're just not, leverage just not working in our favor. Leverage not working in our favor. Net, looks like we need to go a little bit lower. Reddit, looks like we need a little bit lower. TSM, potential breakdown. MAT, potential breakdown. Be careful. That could be a bottom, but could have a little bit lower to go. Long term, like that looks like we may have bottomed. Look at that move up, that retrace. That's very healthy looking. Could go just a smidge lower. And turn. If we pull that down just a smidge lower, yeah, that looks better right there. EST, under the roadmap line, downward pressure, RH. We tag the target. Does that hold, or are we going to push down to 89? That looks like a 618 retrace. This potentially has the power to bounce and go back higher. Roadmap line up here around 289. QQQM. Same 618 retrace. Same story. Same CLS. Sitting here under the roadmap line. Look for this to pop. Break back above that. 618 at 103, 104. And get the upside target at 164. XLY. That's down below the 618. Looks like we've got downward pressure. It might extend down to 167, 170. A lot of this is Amazon, if I remember right. Yeah, Amazon 21%. Tesla. So you got these two suffering here in the market for 36% of the thing. Then you got Home Depot, McDonald's, Booking.com, TJ Maxx, Lowe's, Starbucks, O'Reilly's. Yeah, if O'Reilly's was a bigger piece, this would be probably rocking and rolling. Yeah, O'Reilly's has been rocking it. Got a split coming up, 15 for 1. Bring this back down into reasonable territory. TECL, potential to bottom. 3x leverage. Be careful on leverage. ARM. Touch the first target. If we get below 70, we're probably starting to have downward bias to go in and make that lower low. That IPO lower low thing I talk about. So watch out for that potential on ARM. PANW is below the roadmap line. Potential downward pressure. QLD. Same pattern on a lot of big tech here. Looking for it to hold this retrace or make a lower low. Take your pick. QLD, same situation. That's ultra leverage. This is like TQQQ doing that retrace. ANET, same story, same. Just looking for that to hold the 618. VRT. Not really doing the retrace here, but it may push down for a 618 retrace. This could have already bottomed out. Looking for it to form the reversal pattern. Push down to that 618. Why am I looking for that 618? Because that makes a measured bounce setup that can project this much higher on a lot of these charts. So that's why I'm looking. That's why I'm looking for that setup on so many of these charts. That's a reversal setup. AMD, hunting for that 618 retrace. Looks like right there. Might push below it and extend lower. Shopify, also hunting the 618 retrace. Right there, VDL. Also hunting. And this is leveraging video, so may not follow the patterns and may blur it up. DELL. We hit down on the target, so looking for that reversal to set up. Goog. Same pattern, same stuff, same. Looking for that to hold and to set up the reversal. And BA needs to break above the roadmap line, but same kind of potential bounce here. Might retrace before we can go on higher. That's it for today. Bias is still down. Been down for a few days. Looking for that downside target. Not far away now. We're almost there. Right in here. Possibly as low as like 5,000. Yeah. It's a 200-point target. So be ready for a reversal as we get in here. Could bounce at the high end. Could flush down to the low end. Could be anywhere in between. So until we bottom out, set up the reversal. Be careful. You can watch a lot of that big tech for those 618 support levels. And if we hold it, it'll work out. Probably. So be careful out there. I'll be back again tomorrow. Same bad time, same bad channel. Looking for more stuff moving. And have a great day.